Welcome to Robert's Money Minute, where you'll discover insider secrets on how to save time, energy, and money when buying, selling, refinancing, renovating, and maintaining your home. This episode is brought to you by Robert Hastings of Prime Lending, the #1 trusted mortgage provider for American homeowners. Now, here's your Money Minute.
Many Americans find themselves bogged down with a bad credit rating for the wrong reason: illness, losing a job, or simply not understanding consumer credit. Sometimes bad financial situations happen to good people, and bankruptcy is the only way out. But it's not all doom and gloom. There are a number of strategies for putting your credit back on track and getting approved for a mortgage, even after bankruptcy. Going from one financial institution to the next, only to be declined again and again, can be very frustrating, which is where an experienced mortgage consultant on your side can make all the difference. Here are a few factors to consider. Factor number 1, locating the right lender. Some lenders will not approve a mortgage if a bankruptcy shows up on a credit report. However, so-called non-conforming lenders may consider doing so, provided the borrower can demonstrate that he or she has the income to support the payments and is now a good credit risk. Factor number 2, length of time since bankruptcy discharge. Different lenders have different criteria regarding the length of time since a bankruptcy, after which they will grant a mortgage, typically 2 years along with proof of reestablished credit. Some lenders may consider applicants with a more recent bankruptcy. A mortgage consultant can advise on the regulations of various lenders. Factor number 3, reasons for bankruptcy. If a bankruptcy was due to factors beyond your control, this is more acceptable to the lender than if the bankruptcy was the result of poor money management and excessive debt, which can affect the terms of the applicant's mortgage approval. Factor number 4, size of a down payment. The size of down payment required after bankruptcy depends on the type of loan you're applying for. For example, FHA loans require down payments in the 3 to 5% range, while conventional loans require slightly higher down payment. Keep in mind that the higher you can make your down payment, the lower your interest rate will be. Factor number 5, credit report. A credit report is a detailed history of how consistently your financial obligations are met. It provides a picture of financial health based on past behavior. You can obtain a copy of your credit report from Equifax and TransUnion. Factor number 6, credit score. A credit score is an objective summary that translates personal information from a credit report and other sources into a 3-digit number representing overall credit worthiness. A borrower's credit score may determine the rate of the mortgage. The higher your score, the better the rate, which can be negotiated. Some lenders have minimum credit score requirements for those with a bankruptcy. Factor number 7, rate considerations. Most lenders charge a higher interest rate and even some extra fees to those with a bankruptcy. A lender may grant a better rate if certain lending criteria have been met, such as 2 years since bankruptcy discharge, good reestablished credit, a credit score above minimum level, saved down payment, good debt servicing ratios, and a long-term history of job stability. Factor number 8, reestablished credit. Reestablished credit shows the lender that a prospective borrower has new credit and has managed it well since bankruptcy. Typically, reestablished credit should involve a recent record of on-time payments on major bank or credit cards. When reestablishing your credit, you need to be aware that a missed payment at this stage could be mentioned on your credit report for the next 6 years and could be grounds for some lenders to decline a mortgage application. And finally, factor number 9, don't do it alone. As your mortgage professionals, we can coach you on how to improve your credit score over time. While you work on bettering your score, we can advise you on how you can get a mortgage despite bruised credit. So if you or someone you know has gone through a bankruptcy, take heart. There is hope. For a free, no-obligation consultation on how to get approved for a mortgage after bankruptcy, call us today.
Thank you for tuning into this episode of Robert's Money Minute. If you have any questions or comments, please call Robert today at 816-256-5796.